Welcome to Upticks. I'm Jake Falcon, the founder of Falcon Wealth Advisors and your host of Upticks. Today's our 83rd episode, the coronavirus. All right, Cory, welcome back.
Thanks for having me.
You know, you're in the intro video of our show, so I figure it's only right to keep having you come back on.
I feel honored.
And two, I was going to have Jesse come on to talk about the coronavirus, but he's been very busy doing trading and rebalancing for our clients, so I figured I'd give him the night off, and or at least not night off, let him go do some research while you and I talk about the coronavirus, which is crazy.
Sure is.
So as of the airing of the show, we know once we get this through compliance and all the rigmarole associated with that it might be a little delayed. But basically the market has bounced back. Now, does it mean it's full recovery time? Absolutely not. Volatility is probably still going to be a thing until the coronavirus fades away and we move on to the next crisis of the day. But I wanted to talk about it a little bit, get your thoughts, and then just talk briefly about what we did before this latest stint of volatility picked up, and then what we're doing during volatility. Sure. So the coronavirus, I didn't know this. Did you know that this was actually a thing that's been a thing, right? It's not a new virus.
Correct.
And it was actually prevalent in dog. Well, I don't know if it's prevalent, but it showed up in dogs.
I didn't know about that.
Client just told me about this, and they found a vaccine for that within around 6 months. So his whole point is like, what's the big deal? Why can't they find something to take care of it? And I joked, I was like, give me the thing that the dog takes. Right, but that might not be so good.
Might not have the same impact on a human.
So the coronavirus is spreading, and why does that make the market go down, Cory?
Primarily because it started in China, as we know, and China's government took what some people would describe as extreme precautionary measures. Basically shut down a lot of cities and transportation, public transportation, factories, etc. And there's so many businesses now globally that do business and manufacture in China, like a company like Apple is a perfect example, right? And there's concern that because of these supply chain disruptions in China, there's going to be less inventory and companies aren't going to make as much money, and the market was priced for, companies to continue growing their earnings.
But isn't it if they shrink supply that would increase price?
In theory.
Right, but I guess if...
Or economics textbooks, probably.
Right. But I guess it doesn't always work that way because ultimately people need goods and services and they aren't being, and then I think the tourism thing's a big deal, right?
Yeah, absolutely.
So I get that maybe price should go up, but I guess that's a temporary thing. Ultimately, if you don't have toilet paper or whatever they're producing, you need it,
right.
And that hurts things. But, I'm worried about the demand of things too. But, again, if you're traveling and you're going places, well, now the airlines have been suffering pretty badly, right? And then hotels are going to suffer. And then tourist attractions like, museums or, amusement parks or movie theaters. I mean, all things where big groups of people. I heard they shut down the Louvre. Is that what it's called in Paris? The big museum. Heard they shut that thing down. I mean, think about how many people visit that place every day.
Sure.
And the amount of money they're going to lose. And so it's just this trickle effect that goes on. Now, it's a horrible thing, right? You obviously don't want to see these pandemics occur. Sadly, they've happened before, though, right? We've had SARS, we've had swine flu, Ebola was a thing, right? So we've had instances of this before, and again, we'll probably have them again, right? This isn't the last one of these to do. But the main thing, I think, for yourself, health-wise, is just be vigilant, make sure you're washing your hands and you're staying healthy. And then let's talk about the health of your portfolio. And so there's a few things that you and I did leading up to this to protect our clients' accounts. And one thing we did was we rebalanced, broadly speaking, pretty much almost everybody's account into the fourth quarter of 2019, into the first quarter of this year. And the reason we did that was not because you and I knew that the coronavirus was going to be a thing. We absolutely did not know that. But we did know that stocks had run up substantially, and so we took profits and we sold high, all based on mathematics, and we sold and we went and bought other ones low, or maybe we even bought bonds.
Correct.
So step number one is what we did. Two, what we also did on top of that is we shifted out of some growth-oriented stocks and we moved into some more conservative dividend-paying stocks. And that's one of the big perks of being a stock picker is that we can go out there and we can actually buy outright companies that pay dividends
Yes.
if we want to get more defensive in our portfolio. Large growth was the winner 3 years in a row. So we took that as an opportunity to sell some of our large growth holdings or peel back, and then again, get into some dividend stocks. So that's number 2. And then 3, for clients that are approved, we did sell covered calls, which is a whole nother episode in and of itself. But that's just something that we did before this. So what happens? Well, then the market tanks 10 to 15% basically in a week and a half, which is crazy, but believe it or not, it happens. And it didn't happen too long ago. In the fourth quarter of 2018, the market was down 19%. Now that was over 2 or 3 months, but that's still a big, heavy hit. And
Right.
Go ahead.
I was just going to say, even then, I mean, the vast majority of that occurred in a 1 month period, December of 2018, right? I think that was like 15% of the 19% drawdown that happened in a month.
So yeah, it never feels good, and it hurts, right? So again, what are we doing now? Well, bonds have actually rallied because the 10-year Treasury yield has gone down so much. The price has gone up on bonds, and so clients may need to already rebalance the other direction.
And just at a real high level, if you don't mind discussing the reason the yield has dropped, the price has gone up. Why is that?
Well, there's an inverse relationship there. So when bond yields go down, prices go up because you have to pay more money to get a higher yielding bond.
Right, but what's going on behind the scenes to cause the yields to drop so dramatically and the prices to go up so much?
I would say that, the Fed hinting that they're going to be accommodative. It looks like they're probably going to lower rates here pretty soon, would be a thing. Maybe money's going into bonds, out of stocks.
That's what I was fishing for.
Just say it.
They're considered to be like a...
Just, you don't have no trick questions
like
on Upticks here.
I wasn't trying to make it a trick question. More the fact that people are scared about the market, so people are selling stocks, and that money moves into bonds. So the demand for bonds goes up.
So the price goes up and the yield goes down.
Exactly.
Good, thank you. You tried to trick me, but you didn't trick me. You didn't trick me. But so, with that being said, we're not buying bonds.
Right.
We're selling bonds, again, high. We want to sell high, and we go back in and we buy stocks when they're low. Again, only if it's justifiable according to our training out at Wharton, who gives us a mathematics behind when you should rebalance.
Correct.
Right, so that's what we're using here. Again, but we think it's very important. If your advisor hasn't been active over the last 3 to 6 months, they've missed out on some huge opportunities to rebalance a portfolio. And in our opinion, for our type of clientele, our clientele is a high net worth that is typically in retirement or approaching retirement. Rebalancing is very important. And if your advisor is just telling you, oh, just ride it out, it'll be fine. Yes, they're right to maybe some extent, but they should be selling stocks when they're high and buying bonds when they're low. And they should be selling bonds when they're high and buying stocks when they're low. Right, and that's what we've been doing at Falcon Wealth Advisors, and we're very committed to that. And again, it's not easy.
No,
it's not easy to go buy a stock when it's down 10, 15%, right? But it's cheap. It's on sale. Right?
And it's a very good, I was just telling someone in a meeting today that stocks are the only thing that people don't want to buy on sale, right?
Right.
But it's one of those things that conceptually we understand, sell high, buy low, right? But in practice, it doesn't feel good to go in and start buying stocks when they're cratering day in and day out.
Well, and just conversely, it's all fear and greed, right? It's also not easy to sell stocks when they're up 30%.
Yes.
Right, but that's why people hire us, and that's what we're doing. So again, we're numbers guys. We're just doing what the math tells us. You're not getting my gut feel or Cory's. It's all about what does the math say, what has Wharton taught for many, many years, and we just apply it. And we have Jesse, our trader, go out there and make the trades. We say, look, nobody's subjective measurement here. If the numbers justify selling bonds for client XYZ, then sell the bonds, right?
Yes.
And go buy the stocks because that's what the math is telling us makes the most sense.
Exactly.
So again, the coronavirus, we're going to be kicking out more blogs about it. We'll be talking about it more. Keep yourself healthy. My wife still wants to go to Europe, so we're going to see how that goes. You got to live your life, right?
Yes, you do.
Just be clean and hygienic. And is that a word, hygienic? I think it is.
I think so.
Hygienic.
Yeah,
practice good hygiene. And, just be mindful of what you own, right? That's what's also great. We own good quality stocks, and we're buying them at a good price, and we're making sure that our clients' financial plans are still in good shape.
And then let's not forget that lower stock prices today generally equate to premium returns in the future.
Yep, that's why you buy stocks, right? You've got to be willing to stomach this volatility, and if you buy them cheap now, the whole idea is that hopefully they're going to be higher down the road.
Yes.
For our fun part here, real quick, we were talking before we got on air here that you have misplaced your wedding ring already.
I did, but it's been found.
So tell the story real quick. So you had a buddy in town, you guys were getting ready for a wedding, and he had to borrow it. He didn't bring a shirt?
No, he brought one, but actually I think he realized that something was wrong with the shirt that he brought on the way here, so he stopped at a mall somewhere between St. Louis and Kansas City and bought a shirt. Got here, realized the shirt he bought was too big. I was like, I'm pretty sure I've got an old shirt you can wear. That
so you gave him an old shirt?
It still looks nice. It was bigger. He's a bigger guy, a lot taller, bigger guy than I am. So anyway, I guess when I was shuffling through my closet and the shirts that I have hanging up, I somehow set down my wedding ring on a shelf that's in there, pulled the shirt off, the shirt's closed, and I didn't see it, right, that I left it on the shelf. Took it into the other room, realized almost instantaneously that I didn't have my wedding ring, and then for the life of me, I couldn't find it. So he and I and my wife
this is not good,
basically
Cory.
Searched our place pretty frantically for at least an hour prior to this wedding.
And you went to the wedding with no ring, right? Didn't you? You said you had a cheap plastic one you put on?
Yeah, I have like a silicone one that I use like when I go for a run or when I play tennis. It's just more like an athletic ring to put on. But I mean, it's like 5 of them is like $12 on Amazon or something like that.
That's
right?
fine.
So not the fanciest ring, but
maybe it's time to get a tattoo.
It signifies my get there. You know, you're not the first person that suggested that. But anyway,
so your wife found it after the wedding, or the next day?
The next day, last night actually. So it went missing at around 3 o'clock
on Saturday.
And it was found at 8 p.m. on Sunday. A lot of heartache, a lot of
how long have you been married?
Frustration. Less than 4 months.
Sorry, I can't help it.
No, less than 5 months. Less than 5 months. So hopefully, and my wife, she really was a team player throughout all of it.
Oh, that's
because she
good.
knew that I clearly misplaced it and that I was upset. She's like, well, there's a lot of this happens. Like, how many stories have you heard about guys that have lost their wedding ring? I was like, other guys do that. That's not what I do. And that's why I was so frustrated. But yeah, I know.
You did. Well, I'm glad you found it. I'm glad. I know you didn't. You don't have diamonds in it or anything.
No, but that was our weekend excitement.
That's a lot. I'd be pretty frustrated too. Well, that's all the time that we have for today. Thanks for sharing your little personal story there.
You're welcome.
Thank you as always for tuning in. If you're watching this on YouTube, we really appreciate it. Our subscriber base is growing. Also, if you're listening on your favorite podcast platform, thank you as well. You can find us out there on Instagram, Twitter, LinkedIn, and Facebook. And certainly go to our website at falconwealthadvisors.com under the content section, and you can subscribe to the retirement report, which is basically a weekly email where Cory and I and other members of our team, we author original content that we send out to our subscribers. And I think we're getting close to 2,000 subscribers. So it's been pretty awesome. And that base is obviously growing as well. Thank you again. We hope you all have a great week. And we look forward to producing more of these shows.